Right. So what am I going to do? Lock away all this extra cash for 37 cents per share? Like it makes no sense to sell the put for it.
Yeah,
Unless
3.7% for 6 months. All right. So
yeah,
annualized, that's 7.4 or whatever it
right.
is.
Yep.
At that point, you're just waiting. It's like, would you just be prudent to kind of keep your cash on hand in a treasury or something like that?
Dude, you're getting like 4.9% of Robinhood Gold right now to just sit in
Right,
cash. Not to
right.
mention there are still some other companies, like in my opinion, that are very liquid that have an opportunity to go much further, even under a recessionary scenario. Like in my opinion, Google. I think Google is so undervalued right now. So
Mhm.
even though I have a cash position, every day that I'm doing more DD on Google, I'm getting more and more interested, man. I'm like,
Did you
man, should I be buying more?
buy any when I know you were buying Meta, right? And that's why I didn't have cash for Meta, was I was buying Google and Amazon. So
Mhm.
unfortunately I didn't have the quite the return that you did on Meta. So congrats for taking profits on that, by the way. Not
Yeah.
all profits. I don't know how much you sold, but you took some, and I
Mhm.
agree. I think it's a good opportunity here to take a little bit for Meta. But my
Yeah.
question is were you a net buyer of Google and Amazon when they were at the same time, or was Meta your big one at
Yeah,
that
I
point?
did. I had some options contracts on Google and Amazon as well. Just not as many as on Meta, because Meta was down 70%, dude, from its all-time highs. And literally their operating cash flows was all being negatively charged by the metaverse spending, which the minute that Zuck said, look, metaverse is going to take back seat, I was like, dude, this is a very, like, in terms of undervaluation, Meta was the most undervalued among the fangs. That kind of like the script is kind of flipped a little bit in that Google is the most undervalued fang right now. So I am right now taking some of my wins in my Meta and actually shifting them now to Google instead, because I see Google right now with their cloud offerings, with their AI optimized cloud, it's just growing like gangbusters. They're generating cash flow from there. Think about it from this perspective. If a recession comes, Matt, are you going to watch less YouTube? Are you going to search less on Google? No, right?
Yep.
So that's one
That's
of
not
the
what
things that I
Tanner
love.
says, though. I'm just kidding.
No, but it's just one of those things that like I see Google as a, and they still have room where Google can actually make some cuts, but look at them, man. Look at what they're doing right now. It's nuts. Google is a cash flow beast. They've also authorized $70 billion of share buybacks. They have very similar operating cash flow, like total dollar amount, similar to Microsoft, yet they're priced at a 60% discount to what Microsoft is worth. So I'm like, dude, if you're telling me which company you want to bet on, bro, Google. Google right now is on like and the other thing is Microsoft pissed off Google, dude. Microsoft just came out and said we want to make Google dance. You woke up the goddamn sleeping giant that is Google, man. That was not a smart move by Satya Nadella. Now Google's on the warpath to take Microsoft out. So we'll see what happens.
Yeah, I think the thing that I don't know if I'm on mute or not. No, I'm not. Okay, good. Yeah, the cloud revenue piece. I think you
You're
and I
looking at
touched on that.
Q1. You're looking at Q1 2023. Q2
Am I really?
2023 is where, yeah.
That's why I was so confused.
Yeah.
Um, that's the wrong one too. Earnings. Here we go. Let's see if this is showing up. But yeah, the thing that I was most excited about for uh, was the cloud revenue. Kind of came in pretty
Yep.
heavy. It grew like what 30% I forget what it was. The numbers are out of
Yeah.
my head at this point, but
Yep.
it was really nice to see, and it's starting to like actually be at that point where you get a lot of income generated from that,
Mm-hmm.
because it was just profitable last quarter for the first time, and now it's already in like the several hundred million in terms of income. I'm trying to see if they have it like readily available in
Yeah.
terms of where it was
There
segment
it is.
results. Yeah,
There you go. Operating income. That's what it is. You see right there, 395. So
yeah,
they had almost a $900 million swing from negative 600 million to positive 400 million. That's freaking crazy, dude. Actually,
yeah,
oh no, that's $1 billion swing. Sorry, in
yeah.
operating income for their Google Cloud services.
Yeah. So if they continue to add a billion, 2 billion, it's like this is going to increase because basically what I'm looking at is you added 1.8 billion in revenue, and that basically 50%, 40% of that went directly to the income statement. It's like, well, shit, if they're able to continue to grow this at 20, 30%, this is going to easily grow, very quickly as well, because
Yeah.
at least for the time being, you're getting the majority of your operating expenditures are kind of getting covered at this point. So this is going to explode. So you think about it, say this goes to $10 billion next year. This is going to be something in like the $2 billion a quarter range.
Yeah. So $8 billion a quarter.
$8 billion a year in terms,
a year, $8 billion a year.
And like, I don't think people are fully recognizing that. It's just like, well, shit, multiply 8 billion times 20, right? That's $160 billion of market cap. That's immediately, and that's just 1 year's growth, right? Imagine this grows 20 to 25% in the next year. This is going to be $8 billion a quarter. And then it's like, well, then add another onto that. It's like, well, then you're going to be in the 12 to $16 billion a year. Granted, that might be looking at fiscal year 26 or 25, but this isn't going to slow down. And I don't think people are truly putting that into perspective. And I know you are, but I don't think everyone else is. And I'm excited.
And then
everywhere else.
And you think about it, the price in terms of share buybacks, 70 billion. That means in 2 years, that's $140 billion of buybacks that you're going to end up seeing. So now the pie, slice wise, has just gotten less. So now on an EPS basis, you're getting a much bigger part of that revenue for being a shareholder. So like I said, my price target on this is about 200 by the end of next year. Just based on where it should be trading historically, and just the amount, 200.
And how much is that? Just
2.4 trillion.
Expansion? How much
2.4 trillion.
2.4 trillion.
2.4 trillion market cap. And also their PE right now, just off the top of my head, 27. It's a 27 PE on this basis, current basis, and a 22 PE forward basis, which is actually relatively low for them considering where they've been historically.
Forward 12 months or fiscal year 24 or
forward 12 months.
Okay.